And hello, everyone. Welcome to another power scanning session. It is May 30th, 2026. And once again, today we will be on the lookout for the most interesting swing trading setups for the week and the weeks ahead. My name is Daniel, and I will be your moderator throughout this session. And I'm greeting you today once again from our beautiful office here in Montreal, in Canada. It's a cold day today, 13 degrees only, quite unseasonably cold. I heard in Germany, I think we have many viewers from Germany today, 30 degrees plus out there. So only 13 degrees here in Montreal. Wow. But at least we have blue skies, which is nice. All right. And also, I'd like to thank you guys for joining us today, particularly during the Champions League final. Wow, had I known this, I probably would have rescheduled this webinar to a bit of a later time during the day. Well, thanks, guys, for being here despite this big sports event going on. Anyways, where are you guys calling in from? Who do we have in the room today? Please share your location with us. Let's see. Who do we have? We have Art from Frederick, Maryland. Finally, a nice day and great flying weather. Amazing. All right. And Art is going to take his grandkids out this afternoon/evening in the airplane for a nice flight around. That's awesome. Linda's there. Hey, Linda, how are you? Welcome. To this session and greetings back to Orangeville in Ontario. Andrea is there. Wonderful and warm Munich in Germany. That's awesome. Good for you. It's really cold here in Montreal, 13 degrees only. All right, who else do we have? Andrea is greeting us from sunny Hamburg, and she says she's happy to be here. Football is not so important for her. Football is very important to me. Had I known, I probably would have watched the Champions League final instead, but I did not pay attention because typically a Champions League game starts at 9 p.m. European time, not at 6, which is quite weird. Anyways, and Aubrey is there greeting us from sunny Cyprus. Of course, it's sunny in Cyprus. Amazing. All right. And by the way, Aubrey, I might be in Cyprus in a couple of weeks for the IFX conference. If I do, I'm definitely going to shoot you a message just like last time. All right. So with this, let's get started with today's session. So once again, today we will be on the lookout for the most interesting swing trades for the week and the weeks ahead. And just as a reminder, a swing trade is not a day trade. So it's not a trade which you would open and close within the same day. And it's also not a long-term investment, like a buy and hold or sit and forget investment. A swing trade is right in the middle of these two extremes. And what's most important about a swing trade, you will need to monitor a swing trade, meaning at least once a day, you should check up on your trade to evaluate whether you should do any adjustments to your trade. Maybe close it out, maybe add to it, maybe change some of the parameters. So that's important when it comes to swing trading. What we will be doing today is what we call the 13 minutes strategy. And once again, the exact number is not so important, but what's important, it's that we're going to show you something that you can do in your own trading routine in just a few minutes. And having a routine is important when it comes to trading. Here, for example, that's my routine. I discussed this one last time we talked in this webinar. But what's important is that you have a set of steps which you should go through every single day, like preparational steps, but also execution steps. So these are my steps here. And the important thing is this needs to somehow fit into your day. So we all have busy lives. We all have other things to do other than trading, for the most part, at least. So it needs to be something quick. And this is where this 13 minutes strategy comes in, because what I'm going to show you today is something you can do in just a few minutes every single day, and therefore you should be able to incorporate this quite easily in your daily trading routine. All right, now who are we? And especially for those of you who are joining us today for the very first time, we are tradingindicators.com. My name is Daniel here on the left-hand side, and together with Homa here in the middle, we have created trading indicators about 10 years ago, and about halfway throughout our journey, Niklas here on the right-hand side has joined us, and he's become one of our lead developers ever since. And Niklas is also in the room today, looking out for your questions. So if you do have any questions, guys, please don't be shy. Put your questions into the Q&A box, and we will get to those as we proceed through this presentation. All right. Now, I do need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. when it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right. So with this out of the way, let's go through a couple of quick housekeeping items. Number one, what we will be doing today is to interactively scan for setups using our great Liquidity View dashboard. It would be best if you followed along. I know that most of you have access to the dashboard already, but for those of you who perhaps don't have access yet, you can sign up for a 1-week free trial right here and now, simply by going to this link, tradingindicators.com/view, and Niklas will paste this link into the chat box so that you can sign up for this free trial. You simply need to fill out a form. It's really quick. Put your payment information there, but you will not be charged within that first week, and you can cancel anytime. And best of all, you will get instant access to the dashboard. This will only take a minute or so. You will have access and you can follow along the very same steps that I'll be doing today. Next, for those of you who have already access to the dashboard, we have a very comprehensive bootcamp on all the features that are currently in the dashboard. It's available at tradingindicators.com/bootcamp. Check it out. It's very detailed and comprehensive. I don't expect you to, study the entire thing, but at least at the minimum, the bootcamp will give you an idea of what are the various features included in your dashboard and which ones perhaps are the most relevant for your trading. So it's available here at tradingindicators.com/bootcamp. We also have a Discord channel at tradingindicators.com/Discord. It's completely free to join, and our objective with this Discord channel is to create a trading community where trading are helping other traders. So this is our primary objective. It's an outlet for you guys to exchange ideas, to ask us questions, us moderators, and to really create a community where we are helping each other. All right, so it's tradingindicators.com/Discord to join this channel. And also we have an ebook called The Power of Three. You can download it at tradingindicators.com/power of three. Niklas will put this link also into the chat. And lastly, if you have any ideas about improvements when it comes to our dashboard, about any new features, perhaps something that is not currently working so well, please don't be shy. Share your feedback with us. Your feedback is what drives the further development of our dashboard. So the more the merrier, the more feedback we'll get, the better the faster we can improve the dashboard to make it truly fully usable for all of us. All right. So with this, let's get started with our market review. Now, what has happened in the last week in the markets? Let me switch over to our Liquidity View dashboard. There we go. And we're going to start with the SPY, the S&P, the ETF that tracks the S&P 500s. All right. So SPY, well, the pullback that we saw about 2 weeks ago, this tiny little fraction here of red in the sea of green, well, it was just where it was, a very shallow pullback. My, in quotes, hopes for a bit of a deeper correction, maybe 2 levels down, 3 levels down, ideally 4 levels down. My hopes did not come true. This was a very shallow pullback, and prices since then have continued its upward grind. What we notice now is that once again, we made all-time highs. That's kind of a broken record every single week. All-time highs on Friday, but look how far prices are away from our averages. These are our average lines, these green lines here for different speeds. This one, this one, this one. Prices are really far away from these means, from these averages. And to me, when prices are so far away, this is oftentimes a sign that, hey, the chance of a pullback, a correction is quite elevated. And of course, it's just a question of when it will happen, not if it will happen. There will be a pullback at some point. I personally will wait for this pullback, and then I might be jumping into a new position of SPY, because right now things are just too extended for me. Very similar picture on the Qs, the Nasdaq 100 ETF. Also here, prices basically came up almost in a straight line. I'm not sure what happened here. There we go. So look at how straight things went up with basically no variation to the upside or downside. That's quite rare for any symbol. And here we can see in the Qs, since the low point on March 30th, about 2 months ago, prices have been going up in almost a straight line. Let me just quickly draw this in here. You can see it. Just a second. Just a second. There we go. Here's my drawing tool. Yeah, from here, look at this. It's pretty much a straight line. Look how little variation we had away from this line. It's very little. That is quite strange for any trending symbol. But nonetheless, it happened here. And if you look at prices, where prices are right now, also here, we can see how far away we are from our averages. You can see the average lines here, price are quite far away. And if I measure this, what the distance is from this candle here down to our averages, that's 11%. And that's the kind of pullback I personally will be waiting for. Not sure we're going to get 11%, but maybe 5%, 6%. That to me could be an interesting long opportunity in the Qs. All right. And to show you an example of how this could look like, let's check out the IWM, the Russell 2000 ETF. So here in the IWM, what do we see? Look how our entry idea from 2 weeks ago has panned out. I'm going to hide real quick our MA rush indicator just to make that picture. This is what I'm talking about. This kind of pullback, 3 levels down, maybe 4 levels down. This is what I would like to see also in the SPY and the QQQs, because then you can enter on such a pullback, especially just like in the case here with the Russell, if it ties up, if it coincides with a key technical level on the chart. So that was a nice trade here, worked out beautifully. And perhaps we're going to see another correction here in the Russell down to this level, and then I might consider this kind of long trade again. You can see here we broke resistance, came up, back to the broken resistance level, now acting as support. Up again, retracement down to the broken level, now acting as support, and up again. This is the kind of setup I will be looking for. And today, we're definitely going to see some symbols with exactly this setup once we start our scanning process. All right, so that was the IWM. What about oil? USO. So we had stated that oil was nearing the lower end of this trend channel here. Now, of course, drawing a trend channel with just a couple of points here is, it's a speculation, to say the least. So what we saw here in oil is a pullback. And I thought in our lunch and learn session on Tuesday, maybe as prices came down to this lower end here, maybe that will be the lower end of the pullback. It then came down a bit further. But nonetheless, I still think the idea that we had, hey, potentially enter on, I can just simply draw this differently here, would just make as much sense with this trend channel here. Maybe this pullback could be the lower end of this correction down to level 4 pullback here in our trend radar indicator before we will see another jump up. We also discussed in our lunch and learn session, one way to perhaps play this is with using what we call a credit spread, which is a net selling strategy. It's risk limited and involves selling and buying a put option together, which for a net credit, and therefore limiting your risk. Because if you just sell a naked put, if things correct completely down in oil, if you come back to the levels that we used to see a couple of years back, like down to the 83, 93, this is something I don't want to be caught in. Therefore, a risk limited strategy perhaps here would make sense. And the credit spread made sense because premiums are fairly high. Something you can check out in our lunch and learn recording if you're interested. All right, so that was oil. What about gold? Gold has seen a nice bounce off its support level last week. I think this happened on Tuesday or Wednesday. We came down here to this key support level. This is our long bounce setup, coinciding with a level 4 pullback in our trend radar indicator down here. If you scroll back in oil, and I mentioned this last weekend multiple times now, if we just take a look what happened here in oil, we can see that over the last years, 2-3 years, a level 4 pullback is the most we could get in gold, before we saw a recovery of that pullback. And this is exactly my idea, or this was my idea. On Tuesday, we saw this pullback down to the support level, and we can see here already early signs of a bit of a bounce off this level towards higher price levels. And now I believe what we may see next year in gold is an attempt to close this down gap here. For this prices would need to come up all the way to 427. And eventually, I believe you're going to see also an attempt to get towards this resistance level here at 447. So that was GLD. What about silver? SLV. Similar story here. Also here, we do see a level 4 pullback. And I see silver more on a bit of a sideways consolidation. But when prices are at the lower end or near the lower end of this consolidation phase, I think this can be an interesting long opportunity as well. We saw this here, prices came down to the lower end of this blue line here, our sideways channel, the lower end of it. We are in a bullish trend in silver. And, going with the trend, when we see a pullback towards the lower end of this channel, might not be the worst idea. And also here, I believe we may see an attempt to gap fill this down gap here, and prices would need to go up to 75 if that were to happen. All right, so that was silver. What else do we have? We have Bitcoin, BTC. Oh boy, Bitcoin is it's a mess. Just to be honest about it, it's a messy symbol. It smells a bit bearish here. If you look at this one now, the way it waved down. Just in all honesty, I thought maybe here after we broke above this. In fact, let me just quickly hide this one here. If we broke above this level here, around 74,000. Maybe I thought we're going to get back up, but now it definitely smells a bit bearish here, making lower highs. It was a high point here, high point here, high point here. And we may see another lower low. If this happens, price would need to come all the way below 60,000. I don't hope for this. I told you many times, I do have a Bitcoin position, strategic long-term position in Bitcoin. I even bought some more when they came down to 70,000. We'll see what happens, but it does smell a bit more bearish now for sure in Bitcoin. And, an attempt at least towards this level here at 65,000 may seem to be in the picture right now. All right. So that was our market review. Let me quickly see if there are any questions so far. No, I don't see any. I see Daryl saying hello from San Francisco. Good morning to you, Daryl. I know it's early there, 9 a.m. And Derek is also saying hello. Perfect. Great. All right. So with this, let's start our scanning process. So I'm going to go back to our slides. There we go. And what are we actually trying to find today? Well, we're kind of always looking for the same setup, which is a long trade entry. So we know there's an upside bias, a bullish bias in the stock markets. So stocks on average, of course, there are many exceptions to this, but on average, tend to rise rather than they fall. And we want to bank on this bias. We want to take advantage of this bias. And this is why we will be looking for a long entry. And ideally, for our long entry, we want the stock or the symbol to be already in a stable and smooth uptrend. The longer the better, the more smooth it is, the better it is. That's one of our preconditions, long-term uptrend. But of course, we don't want to jump in blindly into the uptrend. We don't want to jump in if prices are very extended. This is also why I don't jump into the SPY right now. Of course, they could go higher, but it's just not my trading style. I want to patiently wait for a pullback, for prices coming down towards the average lines. And ideally, this pullback should not be too big and not be too small. It should be right in the sweet spot of things. And we call this a healthy pullback. And we can find these pullbacks, and I'll show you in a second how to do it, using our trend radar indicator here at the bottom by looking for setups where we either go 3 levels down, like 3 red levels here, 1, 2, 3, or 4 levels down, 1, 2, 3, 4, while the last level, the lowest one, is still green. These to us are healthy pullbacks, 3 or 4 levels down. And now the kicker. Ideally, this pullback will coincide with a technical level on the chart. Either a support level, as we can see it here, prices are coming down to this reddish area here. That's a classic support level, or a former resistance level, like in this case here. We broke, prior to this, we broke above this green line here. Then prices moved up initially, then pulled back down to this green level, down to this former resistance level. And I say former because when resistance is broken, it will change its function, its role, and resistance will become support. And this is where we want to jump in, these kind of areas, because these can be launch pads for another nice move higher. All right, so how do we scan for this? And by the way, I forgot in my market review, forgot to review our trades from last week. Actually, let me do this real quick, and then we're going to come back to these setups just to see what's new this week. But let's have a quick look at what has happened to our trades last week. That's a good point. I forgot about this. All right, so back to the dashboard, and real quick, I'm not going to spend much time on this. So what did we find last week? So this was our watch list from last week. And by the way, guys, we have another exciting thing to announce. And in fact, our Lunch and Learn session on Tuesday, I'm going to show you some new features which will find eventually their way into the dashboard. I'm going to show you next Tuesday what is our process from an idea to having a first prototype to refining it to actually for a feature to find its way into the dashboard. And this was actually the perfect example. And I believe this came from you, Linda. I'm not sure if maybe I'm confusing you, but I believe it was from Linda, who's in the room today, who asked this quick little preview, who asked us to find a way to include a scanner into the dashboard, which will find stocks which are really overbought, like very extended, perhaps above their 2 standard deviations Bollinger Band or below of that. And the more extended, the better it is, because that might show a setup where a reversal might be imminent. So this is a feature which we internally at least call Z-score. I'm going to show you next on Tuesday how we're going to use this feature. In fact, I'm going to use it today as well, a bit later on, to further refine it, and eventually how we integrate, or we will integrate this feature into the dashboard. That's coming. All right, but I digress. So let me go back to my swing trades from last week. So what do we have? We had Casey's General Store. Yeah, I still like it. It's a symbol which has been in a really long-term uptrend. You can see it here. As per Emmy Rush, it's been bullish forever. Now we see first signs of a pullback. It's a level 4 pullback. It's a bit deeper than I thought it would be. We're at the lower end of our entry zone right now. Nonetheless, I still like it a lot, and I like the fact that we coincided with this first Emmy Rush line here. So if you're not in this trade yet, I might consider it for next week when the market opens on Monday. So that one is so far so good. Chemical, beautiful. Yeah, it's been very reliable to us. Aubrey, did you jump on this trade? Just wondering. I know Aubrey has been trading Chemical quite a bit. Beautiful bounce off the support level here in Chemical towards the middle in between support and resistance. This one worked out beautifully. And Linda is saying, thanks, Danny. I'm excited that you're considering my suggestion. Yeah, of course. That's exactly what I said. Sorry. Maybe I'm jumping too much today, but I said, hey, share your feedback with me, guys. We love your feedback, because if it's a good idea, I think this can be a good idea. We're definitely going to explore this further. All right. So back to my slides here. Cummins, also a nice one. We were down here. We pointed this out last week. Prices jumped up initially. Unfortunately, a bit of a down day on Friday, but nonetheless, this is also working out as planned so far. The MCore Group, that one is a bit on the edge right now. I still like it. I still like it a lot. It's our zone break retrace setup here. We came now down right into the middle of this resistance level. Level 4 pullback. I still like it, but we may need to consider the fact or contemplate the idea that prices may come down all the way to this level here at 783. Because oftentimes when there are two levels nearby, like this resistance level here at 835 and then one here at 778, oftentimes it's the lower level, which is the more important one. All right. Goldfields Limited. I like it. I still like it for a long entry. It's exactly where we want prices to be. If we are bullish gold, I think also Goldfields Limited will benefit from this. Also here, I predict a bounce off this level. So far, so good. Our Brazilian stock, I'm not even going to try to pronounce this stock here. It's a water treatment entity in Sao Paulo. Beautiful level 4 pullback right to this support level here, and also now a liquidity capture event at the last bar. So far, so good here. And then we had Walmart. Walmart has been coming down a bit further than I thought. I still like it a lot. It's still, a very heavily trending stock, but we now see a level 5 pullback here on Walmart. And I believe that will lead perhaps to a bit of a deeper correction in Walmart. I would still personally stay in that trade. I believe also we mentioned it. I would put my stop loss at around 100 here, just below this level here, just to give this correction a bit more room. Eventually, I believe Walmart will recover and the overarching uptrend will continue. And finally, we had Woodward. Yeah, nice bounce here. They came down on Friday a bit more, but nonetheless, this one is also still exactly where we want it to be. So overall, I believe a pretty decent performance as for our trades, which we found last week. All right. So let me quickly have a look here. Yeah, okay. I'm going to get to those questions just a bit later. So how can we find the trades which have become or will become relevant for this week? So what are we going to do? Well, we're going to basically enter the exact same conditions that we pointed out on our slides here. Like here, long-term uptrend, healthy pullback, and coinciding with a technical level. We're going to enter these conditions into our dashboard. And this will only take a couple of clicks. So how can this be done? Let's check it out. So back to the dashboard here, and let's enter these conditions. And the first condition was, hey, we want to find symbols which are already in a long-term uptrend. We're going to use our MA rush indicator for this. This one here, it's called MA rush in the scanner, but we can also see this MA rush indicator here on our chart. For example, here in terms of Agilent technology, we can see MA rush shown on the chart right here. Let me hide the other ones. Which basically shows us these bullish or bearish labels on the chart. And depending on what was the last label shown on the chart, this will give us the current trend direction. So in this case here for Agilent, we are currently, you can see this last label here, in a bearish trend. So that's something we want to consider. Because we're looking for long entries, we want that symbol to be already in a long trend. Okay, so how do we filter for this? Well, for this, we're going to go over here to our MA rush column in our scanner, select the filter to the right of it, and select bullish for at least 500 trading days. We have different types of filters here, but that's a good compromise. So 500 days, that's a long time. That's almost 2 years, because these are trading days, not weekdays. So bullish for more than 500 trading days. So once done, we can see we are now down to only, in quotes only, 1,000 symbols of our 6,143 symbols on the dashboard. So that's pretty cool. So that's condition number one. Condition number two was what? We want to see a stock which has pulled back a little bit. So unlike this stock here, A5G.IR, an Indian stock, where prices are not pulled back, we're actually quite extended here, we want the stock to come down a little bit. We can see this by a patch of red in our trend radar indicator down here. So either 3 levels down like here, 1, 2, 3, or 4 levels down like here. How can we find this? Well, for this, we're going to use our trend radar column, our pullback column here, this one here, and select level 3 or level 4. And once done, we can see that now we only have 189 stocks. That's pretty good. It's already more manageable. And now remember the kicker. What was the kicker? The kicker was we want this pullback to coincide with a technical level on the chart. And this is where our liquidity IQ indicator comes in. This one here, which draws these key resistance and support levels on the chart. In order to find symbols which are currently near support or near former resistance, we will either pick here in our scanner long bounce, which will find us symbols like this one here, which are coming down near support zone here, or we're going to use long break retrace, which will find us symbols like this one here, like CM, Canadian Imperial Bank, CIBC. Beautiful zone break retrace setup. This is what we're looking for. Now I do one more thing. I like to sort my symbols by trend duration, by simply clicking on this MA rush column here and sorting from highest to lowest. And this now gives us 17 symbols. We're going to go through these 17 symbols to find the ones which are of most interest for us for next week. All right, so let's start with the first one, Targa. Now we had Targa many times in the past. And let me just quickly see what is in our trade notes here. When was the last time? Oh, this is old. Okay, it was, that was actually a trade I took back in August 2025. That's interesting. But before this, we had Targa here on August. It's 1 year ago. That's such a coincidence. Let me just quickly see what happened here. That's funny. This was on May 31st, exactly 1 year ago to this date. And we had this nice setup here. Can I make this bigger now? At around, oh boy, I can't even see this. Let me see this on the chart here. I think I do need glasses. Let me just quickly see what happened 1 year ago if Targa was here. No, even further. 1 second. 1 second. Where was it? It was here. Down here. Oh, that would have been a nice entry. Look, we came down to this key support level. Prices were hovering around this level for quite some time. Then it exploded to the upside. So yeah, nice trade there. And now we're trying to do the same thing here. We're trying to enter potentially on this pullback in Targa. It's a level 3 pullback as per our trend radar indicator down to this broken resistance level. Definitely an interesting idea for next week. And we're going to add this one to our watch list. So I'm going to create a new watch list now. There we go. All right. Create. Okay. How do I call them? Weekly swing trades? Yeah. Oh, it's a long day for me already. I had a webinar right before this one. Oops. Sorry, 1 second. Oh, there seems to be a bug. If this ever happens to you, if you can create a new watch list, it's a little trick, as you may know. Just reload the dashboard. But I'm going to take a note of this. So, Nicholas, can you please take a quick note of this? We're going to fix this permanently. But sometimes, it's a great tool, but just like every software tool, also our dashboard here and there, that's a small little glitch. Luckily, this can easily be fixed by simply reloading the page. All right, so one more time. Weekly swing trades. Colon 2026 05 30th. All right, and we're going to add Targa to our list. There we go. Done. Okay, perfect. Moving on. Next one, Imperial Oil Limited. That's an interesting too. I'm going to explain this to you first in the context of our indicators here in our current dashboard, but then I was going to show you something which came directly from Linda and her indicator or scan idea. So hold on for this. So first off, long-term uptrend, no question about it. Now the correction down to, you can see it here, down to a key support level with a liquidity capture event even at the last bar. And most of you will know what such an event is. A liquidity capture event is a candle which tests a key level, like the last one here. And on top of this, this candle also has abnormally high volume. And if this happens, oftentimes this can be a sign for that a bounce is about to happen. This is exactly what we want here with this particular symbol. So I like what I'm seeing here, Imperial Oil Limited. I'm going to add this one to our watch list. And then I'm going to switch over to our testing or developer versions of this dashboard. I'm going to show you this new feature real quick right now. So I'm going to open up the same symbol, IMO, Imperial Oil Limited. And what you see here at the bottom is a prototype. It's not there. We still need to do more refinements and testing, but it's a prototype of a new scan and indicator, which we may want to introduce into the dashboard. Basically, this line down here, this blue line, shows you how far, in terms of standard deviations, that's a statistical term, how far prices are away from their mean. So the mean is 0, around the middle line here. And then the higher you get to the top side, the more prices are extended away from the mean to the upside. And the more down you get, the more prices are extended to the downside. And we can see here with this particular symbol, we're at minus 2.6, meaning we are right now 2.6 standard deviations away from the mean. And this concept comes in directly from a gentleman called Bollinger. Let me quickly show you. It's good to mix it up a little bit. Bollinger Bands. What do we see here? So Bollinger Bands, I'm going to hide all the other stuff here just to explain this a little bit further. So Bollinger Bands are basically these lines here. You can see them, and they can be configured with different standard deviations. But what we see here are these blue lines at the bottom, and the blue line, or the blue line at the bottom, and the blue line on top here. And the one in the middle is the mean. And we can see that right now prices, you can see it here, they are below this blue line. Blue line is maybe perhaps here, prices are down here. So we actually below that line. And this is being picked up here at 2.6. And the more we are away from the mean, either to the downside or the upside, the more the concept of mean reversion may kick in. And we may see a bounce back towards the mean again. And for this price would need to go up. Let's see where this happened the last time. I only want you to focus now on the line down here. When was the last time we went down to minus 2.6, where we are right now, or in the vicinity? It was more or less, let me just make this a little bit bigger here, 1 second. More or less, it was pretty much Here we were down at 2.8 even. Look what happened afterwards. We snapped up. Here, same thing. We're below, like very low, and we snapped up again. So I think there's something to it. This is thanks to Linda. And of course, this concept has been explored by other traders as well. So this is a sample or an idea of, well, just to showcase you how an idea from a user, like in this case, Linda, can or may find its way into the dashboard. Of course, this is right now only on our testing side before they're going to test it and refine it. But eventually, I think there might be a way to integrate this. And if we do, rest assured, there will also be a scanner. You can see it here, which will pick up this Z score for every single symbol. So you can sort for and filter for this. Anyways, this is what might come in the future. We're going to spend some time in our Lunch and Learn session on Tuesday to explore this a bit further because there's some other steps we want to take with this feature. I'll show you this in our session on Tuesday. So I like IMO for various reasons, and also the fact that we are currently at a very low standard deviation here, and we might snap back towards the mean. All right, perfect. Let's move on. What's the next symbol here in our list? Enterprise Products Partners, LP. Also interesting. I like it as well. Look at this one here. Nice uptrend. Decorrection down to this key support level. Another interesting idea level for pullback here on Trend Radar. I like it. I'm going to add it as well to our list. All right. Oh, by the way, I forgot to share this watch list with you. Let me quickly do this right now. As you know, we are always sharing these watch lists with our users, and we're sharing the last 5 watch lists. So 1, 2, 3, 4, 5. The 6th one here from April 25th, we're going to unshare. Do not clutter your account. All right. And Andrea says, thank you for the Z-score indicator. And guys, it's not in the live version yet. We can answer, we can have a bit of a discussion on what this thing will do, but I prefer waiting a little bit until we actually have the final version. It was just to give you a bit of a taste of what might be coming. Yeah. Okay. Yeah, will different stocks have different Z-scores? Absolutely. That's the entire idea. You can see them here. So, you know, I just sorted. Let me just give you the complete extreme here. So now I'm back to all my symbols here at 6,000. I can just sort by Z-score. There's going to be filters too. Look what's coming up here. 6.52 standard deviations to the upside. This crypto symbol here. No idea what that one does, but just doesn't seem right. But what a huge move up. Maybe it's going to be a snapback. That's an extreme case. Here, another one. Oh my goodness. There's some crazy symbols you can pick up like this. Maybe not the best ones to use for trading, but you can see there's some merit. When this happens, there might be some kind of correction coming. Maybe this is a bit extreme. Let me just go to the S&P 500s real quick. And I'm digressing here. What kind of extremes do we see in the S&Ps? 4.29 MTAP. Oh, look at this. Huge move up. Maybe a snapback coming to fill this gap. So definitely interesting ideas. And of course, if you were to trade or to play this, do it with risk limited ways, maybe with a credit spread. I imagine option price also probably jumping up if such a big jump to the upside happens, and so forth. We can discuss this more in our next Lunch and Learn session. Just one example here, one more time. Roland's down. What a snap down. Maybe you're going to see a snapback here as well. All right. So with this, let me go back to our list here. What's next here? SBS, oh awesome, our company from Sao Paulo. I like it. I still like it. I'm going to add it one more time to our watch list for next week. I do think there's a bounce coming there. Next one, BWX Technologies. That's a company that is in the nuclear industry. They're creating parts for nuclear power plants and nuclear-driven underwater vessels and so forth. If you look at the longer-term view here, we can see it's a long-term trending stock to the upside. Level 4 pullback here on our trend radar indicator, coinciding with a key support level. I like it. Also, this one for our trade, for our watch list next week, for the next week. Woodward, we had this last week already. I'm going to skip it this time. I know we had it last week because we have some other quality symbols coming up. The reason why I'm skipping it this time is this gap here. You can see it here from there to there. If this gap, this up gap were to get filled, prices would need to come down all the way towards this price level here. This may weaken this current support level here, so we're going to skip this one. I can't even read this. Emricore Medical Systems AX, an Australian company, I believe. Let's check it out. Yeah, I'm going to skip this one too. Same reason, this gap is not filled yet, but this may come down to fill this gap. So skipping this. Kraken Robotics. Who remembers Kraken? Remember, guys, when we discussed it maybe a month ago, when we were down to this blue line here? I believe we even had a trade note here for Kraken on May 1st. And look what happened. May 1st or May 2nd. Right here, May 2nd. Yeah, at this level here, prices came down a little bit further, but jumped up nicely. Now we're back down to this level here. But the fact that we kind of lost the support level in the past, I'm going to skip it as well for this week. Nonetheless, this could have been a profitable trade. ASR Netherlands. That's probably a bank, I believe. Let me have a quick look. No. Oh, insurance. Okay. And pension. All right. What do we see here? Yeah, nice uptrend. You can see it here. Let's go back a little bit further. Long-term uptrend in this particular symbol since December 12, 2023, an uptrend. Now the retracement down to this broken resistance level. And yes, this could be our zone break retrace setup for another jump higher. So I'm going to add this one as well to our list. All right. And I'm going to skip a couple of these symbols. See, I know there are so many. This is something you can do on your own. But one thing I wanted you to see is this one down here. Canadian Imperial Bank of Commerce. Yeah, for those who live in Canada, you know exactly what that is. It's CIBC, one of the major banks in Canada, has been in a great uptrend for quite some time here. Level 3 pullback, as per our trend radar indicator, coinciding with this former resistance level. I like it for a long entry, for a bounce off this level towards higher price levels. I'm going to add this one as well to our list. All right, perfect. Okay, done. What time is it? 41. Perfect. So let's review quickly what we have. You can see there's so many more symbols which have interesting ideas here. And by the way, the idea is that you guys do these kind of scans on your own and feel free to play around a little bit with the criteria. So maybe one thing you may want to do, just to show you, is to perhaps loosen some of the criteria or maybe make them more strict. Here's an idea. What if we don't use the pullback criteria? So I'm going to delete this one. We have more symbols now. But instead, we require the stock to be in an uptrend for even longer, for more than 1,000 bars or trading days. I can do this. Look what comes up here. Dollarama, another Canadian stock. I wouldn't trade this one because it's right at the support level here, but this was broken in the past. So not for me right now. But this one here, Orly, for example, that's an interesting one. Or O'Reilly Automotive. What do we see here? Prices are testing with a liquidity capture event on the last trading day, this key support level. Let's check it out real quick. Long-term uptrend. You can see it here now consolidating. You can see this is a bit of a kind of a descending wedge even here, which is maybe not ideal, but let me just draw this in a little bit. So we can see it, something like this. And if I go to the full screen mode, here we can see it's a bit of a, descending triangle, which is overall, it's a bearish pattern, but maybe still an interesting idea with a risk-limited approach. And one way, for example, to do this, I'm not going to spend much time on it, is to use options. And in this case, what we can do is we can look at our heat index column here, 4.94, meaning for options with 30 days until expiration at the money, we'll pay roughly 5% premium, which is actually not too bad considering that we actually came down quite a bit. So maybe a buying option strategy is not the worst. Let's quickly simulate this. Back to my favorite tool, Options Strat. Great tool. And what we can do here is, for example, simulate what if we were just to buy some call options for O'Reilly. Maybe we're going to go out to like August or something. Let's see if we want to buy some calls. Maybe, just to show you, perhaps around maybe 85. How much would we have to pay? $620. All right. This is definitely something one may want to consider, but perhaps a bit too expensive. We want to, limit our risk a little bit. $620, if things go side, not go our way, that's quite expensive, and prices would need to come up quite a bit until 91 to even break even. So maybe what we can do instead is to use a debit spread, where we buy a call, but also sell a call at the same time to collect a bit of premium to offset the cost for this initial call here. what we can do, for example, we can add another position here. Sell call. Use this call a bit further out of the money, maybe here at 100. And now you can see our debit is even a bit lower. It's 482, so we lowered this a little bit. But maybe what we can also do is to move our initial call, our long call here, which is above here, perhaps a bit further out of the money. Maybe something like this. 90 call, the long option, the long leg, and the short leg, 100 call. A strike price of 100. Maybe not the worst idea. Let's just check it out. If things don't go our way, we only risk $232, which I think is quite reasonable. And if we are right, if price is actually jumping up all the way to our all the way up to at least, let me just go out a little bit, to at least 100 here, that's the price here, then we can gain $767. That's a pretty decent reward to risk ratio, wouldn't you say? So to me, maybe not the worst idea. Yeah. So something like this I would perhaps entertain for a stock like this, where at least to me, there is a decent chance that, hey, there might be a break of this level. I don't want to risk too much, but maybe with options, you could do something to find an interesting trade idea, limit your risk by quite a bit, and still have a decent upside potential. All right. All right. So that was, that's perhaps one way to do it. All right. So let's now move on real quick to our slides. One thing I wanted to mention, guys, before we do a final review of the trades that we found is if you want to give this dashboard a trial, as mentioned before, you can simply do it at tradingindicators.com/view. You get it for a full week. No payment will be made, and you can just try out the entire full version of the dashboard. The second thing I wanted to mention is that if you are interested in option strat, the tool I am using a lot to simulate different option ideas and what might be the best for one particular symbol. So we did this, for example, for USO on our Lunch and Learn session, which was interesting. We did it right now for Orly. So this is a really cool tool to understand your reward to risk when you would break even. What are the benefits or disadvantages of a particular option strategy? Check it out. They have a special going on right now. The link is down here. It's tradingindicators.com/strat. Let me quickly paste this into the chat box as well. Just 1 second. There we go. I have it prepared here. All right. So option strat. There we go. Tradingindicators.com/strat for this. So try it out. It's a really cool tool. I use it all the time. All right, now with this, let's go back to the dashboard. Let's quickly review what were the trades we had on our watch list. So we have 7 trades, pretty good. And I like all of them. I tell you right off the bat, starting off Targa Resources, really interesting that we had it back here in May 31st, 1 year ago. It's back now on our radar. I like it for a long entry. We're going to add a new screenshot for this particular setup right now. Oops. And right now, by the way, guys, I made a bit of a mistake here. Can you spot what it is? So the chart, which is showing here right now for Targa, is actually our O'Reilly automotive chart. And this happens because the chart right now is still open here in our dashboard. It's still O'Reilly. So I need, of course, to click on Targa first. I forgot to do this. Then I go to my trade notes. I can even rearrange my chart a little bit to make it a bit more pretty. The way I want it. There we go. In fact, let me quickly just also hide some of these labels here. We don't need them, just to make it a bit more clean. And here the idea is, yes, we are looking for a potential long entry around this level here, anticipating prices to come up further to the upside. What we can do here now is then go to our notes. We add a new trade note, and we can, of course, type text here, but also we can just add a screenshot of our chart right here. And the cool thing is it will have all the annotations and all the little styling changes that you just made in the screenshot. So this is always a nice reminder. Hey, this is the setup we are considering right now. So save it. Done. Next one, IMO. I like it for various reasons. Long-term uptrend, level 4 pullback, coinciding with support here, and the Z-score is quite low. So it might be a snapback back to the mean. So we're going to add this one as well to our trade notes. Save. Perfect. EPD, Enterprise Products Partners. Yes, another one. Same thing. Very interesting pullback here down to the support level, level 4 pullback on trend radar, long-term uptrend. And just for the fun of it, let me see what is the Z-score of this symbol. Just for the fun. EPD. 1.67. Okay. It is low, but not as extreme as an imperial oil. Nonetheless, it's an interesting one. So I'm going to add this symbol as well to our watch list. There we go. Perfect. Moving on. SBS, our Sao Paulo company. It's the same setup we had last. I'm not going to add a new screenshot for it. I still like it. So we're going to keep it on our radar. BWXT. Also here, pullback down to support, level 4. Pullback as per trend radar indicator and the long-term uptrend. Yeah, I'm bullish for 965 trading days. I like it. Adding it as well to our list. All right. And ASRNL. You know what, guys? I'm going to skip this one for the very same reason that see these pullbacks here in the past, which have been actually quite deep. It might happen again here for a deeper correction. You know what? It's also a bit more obscure stock. I'm going to keep this one off our watch list. Let me delete this one here. Remove. You can also remove stuff from your watch list. It's possible. And the last one is Canadian Imperial Bank of Commerce. Yes, I like this one. For a potential entry, one of the big 5 Canadian banks besides RBC, TD, Scotiabank, and Royal Bank. CIBC is considered one of the big 5 banks. Nice uptrend here. I like it for a long entry. Perfect. All right. But before I will go to your questions, I just want to do one more thing here. I want to add one more symbol to our list, which is O'Reilly Automotives. Just to keep it on our radar to see, hey, how would this debit spread here would have panned out? So I'm going to add it to our watch list just so we can review it next week when we'll get back to the symbol to see how it panned out. So I'm going to add also a trade note here for this particular one. By the way, last time we had it on our radar here was on Jan 3rd, 2026. That was back here. Yeah, nice uptrend, up jump from there. Maybe we're going to see the same thing right now. So I'm going to add this to our trade note. Perfect. All right. Good. That was my part. Now we're going to get to your questions. And Niklas, do we have any questions that came in?
Yeah, we got a symbol request for RGLD.
RGLD. All right. RGLD. It sounds familiar. What is RGLD? Royal Gold. Yeah, I like it. So if you believe gold will bounce back from this correction here, then yeah, RGLD is just one of the individual stocks which will benefit from this. I like it for a long trade. Yeah. All right. What else do we have?
Sorry, Daniel. And we have a question from Massa. If you enter a trade and during the trade we see a level 5 or level 2 pullback, not 3 and 4, what do you do?
Like in Walmart right now, that's a good idea. So let's go to Walmart. That was one of our traders from last week. So it pulled back more than we thought. Okay, so that's a good example. Good question, Masa. So we can see it here. So Walmart, I liked it a lot last week. We were just right here, level 4 pullback, healthy pullback, all nice. So if you are in this trade right now, I would still be in this trade too, because we said also last week, hey, for Walmart, it's such a stable uptrend. I want to give this trade a bit more room. And I would put my stop right below this resistance level here. So that would be part of my trade plan before entering the trade. So, right now I would just wait it out. Either we're going to recover, bouncing off this level at the latest, or we get stopped out. But I would not close the trade right now. For this Walmart, it's just too stable. It's just a long-term uptrend. Look how smooth this one goes up. I would wait it out. These kind of corrections, sometimes they go a bit deeper. Like this one here. How deep was this correction there in the past? Check it out. That was roughly 23%. And now the current correction, we are at, oops. Oh, sorry, on my microphone cable here. Right now we are at roughly, 14%. If you go down to this one, we're at 21%. So yeah, I would definitely give this trade a bit more room.
Perfect. Okay.
It all depends a bit on what's the overall trend situation for a symbol. Yeah.
And can you please check out IMO? And
IMO. Oh,
at the same time, we have a question. Will different stocks have different characteristics with the Z-score?
yeah, I, I I believe so. This is something we're currently working on. So maybe to have some kind of actually, let's do IMO first. We did have IMO. This was part of our
Oh, okay.
list. Yeah,
Then we have another one from Linda there. Instead of IMO, CRGY.
yeah. CRGY. What is this one? Crescent Energy Company. All right. So bullish just recently, but it's a bit wavy to me. So even though we're bullish here, we're down at support, probably not something I would trade. It's just a bit too wavy. And yeah, to me, a stock needs to be in a longer term uptrend. But of course, you want to give it a shot at this price level here. Well, bullish, why not? It's just not something I would trade. And in terms of the Z scores, real quick, and we're going to have a longer discussion on this concept and how we actually internally evaluate a concept before we put it out there. Is yes, you're absolutely right. Different stocks will have different characteristics. So what might be a really high value, like minus +3 or something for one stock, might be just a somewhat high value for a different stock. So we're going to find a way to kind of normalize this together and also maybe find a way to figure out, hey, for this particular stock, right now the value is really, really high. This is some thinking that we'll get into this, and we're not there yet. So this is going to be a process of refinement over time, either internally or perhaps once we put it out there for you guys, also with our user base. Absolutely. Mm-hmm.
Cool. Okay. And then Anne wants to know about the Z-score. With the Z-score, the higher the negative, the higher the price, or the opposite, in other words. Is a high or low number better? What's better, a high or low number?
It just shows that prices are really either really far below their mean or above their mean. So if the number is negative, like just pick one like ROL here, and we're at 3.94. You can see the mean is somewhere is at zero. So actually, in fact, if I put Bollinger Bands back on here, you can see the mean exactly where it is. The mean is somewhere here. We're quite far below our mean right now. So there might be a snapback. That's kind of the thinking I would see. But of course, you would need to combine this one with key levels on your chart as well. But negative numbers mean prices is below their mean, and positive numbers means prices are above their mean quite a bit. Yeah.
Okay. And the next symbol is PRPO.
PRPO. All right. What is PRPO? Bullish for 321 Precipio. All right, bullish for 321 trading days. Currently near the support level here. We just lost it a little bit. Level 4 pullback. Overall, it's an interesting stock. Yeah, nice uptrend for sure. Nice and smooth. Bullish since February 2025. But of course, we did lose this level a little bit here. I think would be prudent to put your stop loss somewhere below this level here at 18. Give this trade a bit more room, allowing this correction here to complete and snap back into an uptrend. But overall, yeah, it's a nice symbol for sure.
Cool. And next is NVDX.
NVDX from Daryl. How's San Francisco, Daryl? NVDX. Don't we have that one? 1 second. Let me go to trading view for this one. NVDX. Oh, that's an NVIDIA 2x leverage NVIDIA ETF. Oh, that's interesting. Okay. Okay, bullish since Feb 2020 this year. We bounced off resistance. You have a bunch of liquidity captures now trading below this resistance level. Yeah, I personally would wait for it to come down perhaps to these average lines here, maybe around 17 or maybe a bit lower than this, and then potentially look for a long entry. Because entering right here, right below this resistance level, maybe there's not enough room for this particular trade.
Okay. And what do you think of Oracle? You think it's got room to run?
I think so. Yeah, I looked at this earlier today in our German webinar. Once this loads here, and yeah, so here we cleared this key resistance level here. We can see it here. We nicely bounced off support down here. That I believe could be the bottom for Oracle. Trend went to bearish, but of course that's not surprising after this huge correction down that 60% that we lost. But now I do see encouraging sign here with Oracle. We definitely held this resistance level. We broke above it, came down. Zone break retrace now much higher. And yeah, if I look to the upside, it's pretty much blue skies ahead. Nothing is holding back this bullish run. And yeah, it's definitely looking more bullish now. I kind of like it. Mhm.
Perfect. And the next one is going to be
It's going to
scroll down here.
quickly do service now because it was also by N. Because that to me is not so bullish. Just real quick, since we have it on our was mentioned, all these software stocks, of
And
course, they
Daniel,
did. Yeah,
sorry to cut you off.
yeah.
I have to get running for a wedding. I got to get going to
Oh yeah, no worries,
prepare.
Nicholas. Enjoy the wedding. Okay, bye
Thanks,
bye.
Daniel. Good luck.
Yeah,
Bye, everyone.
bye bye. Yeah. Okay, service now. Yeah. Also, they jumped up. It's just so they jumped up right to this resistance level here, and well, bearish. Of course, Oracle was bearish too, but here we didn't clear this key level yet. And I just also believe that service now they are. Of course, I might be completely wrong. I think they are living a bit off their path. They're integrated in most of the big companies with their tools. But with all the new stuff of AI and so forth, I think it's a bit outdated. I've used service now for a long, long time when I was back at Desjardins here in Canada, but also at Morgan Stanley. It is quite acquainted, whatever that word is. It's outdated a bit. Of course, they must have made changes since then, but I just think that this kind of ticketing system may not be so relevant anymore, or can be replaced with something more modern. So here, my outlook is not as positive as for Oracle. That's my personal view. All right. Okay. What else do we have? Daryl's saying, nice weather in San Francisco. Awesome. Aubrey says, on TRGP, looking at trendline IQ help support a trade in the stock. Okay, let's have a quick look. Of course, Trendline IQ is our brand new indicator, which will be released to the public in about 2 weeks from now. But let's have a quick look. What do we see here? So I'm going to hide. Actually, let me just edit real quick here. One second. Quick of a little bit of a preview for everyone. Trendline IQ. Where do we have it? Yeah. Okay. And we have Targa, of course. Targa resources. All right. Let's see. What do we? Oh yeah, that's interesting. That's interesting. I'm happy you actually gonna hide quickly Liquidity IQ here. And that's the MA Rush. Look at this. Where we came down to this ascending trend line here of that candle. That's cool. Yeah, I I agree with you, Aubrey. That's a nice confluence here with this ascending trend line where prices pulled back exactly to there. Good. All right, great. So let me go back to my Q&A here. SoFi. Okay, so what does SoFi look like? Yeah, SoFi went bearish a couple of days ago and now trading below this resistance level. Yeah, I personally would be careful for long entry right now for two reasons. First, we went bearish here, and secondly, the resistance level here is very nearby. Would I go short? Maybe not, but if prices come down perhaps this level here at around 14 or 15, maybe then consider a long entry. But right here, maybe not, at least for me. And Nvidia and Meta really cook. Okay, what's Nvidia looking like? Nvidia, okay. Yeah, pulled back a little bit. I think we discussed this one last week as well. I personally would probably wait for a bit of a deeper pullback, like towards this level here at 197. If it happens, great. Maybe look for a long entry. Prices are still quite expensive, and you can see we're still away from our average lines here. So I think this pullback will come down to this level here at 198, and then potentially look for a long entry here. And Meta, yeah, Meta is a bit cheaper, right? Let me just quickly see what happened to Meta. I believe it turned bearish a couple of months ago. Yeah, bearish here, now trading kind of in the middle in between support and resistance. Yeah, I mean, I think also here waiting until we come down perhaps towards this level here at 582 could be a good idea with Meta. And then potentially look for a long entry. All right. Netflix, Papa. What's going on now? I haven't looked at Netflix in a while. Okay, Netflix. Bearish for 71 trading days. Yeah, we went bearish here. And look at this. This is exactly what I called out a while back. I remember this. See this little, I didn't change this in a while. See this little square here? That was an up gap. And I believe at somebody around maybe April, somebody asked about Netflix. And I believe I warned, hey, Netflix has this huge up gap which hasn't been filled yet. Look what prices are doing right now. They're basically attempting to fill this gap. It's almost filled. Just need to come down a few more. And once filled, I think we're going to get down to the support level here. Maybe then look for longs. Yeah. All right. Perfect. Okie dokie. So this concludes pretty much this session here. Let me just quickly go back to my slides one more time here. Quick reminder, if you want to get option strat for or at a discount, they currently have a sale at 25% off. Simply go to tradingindicators.com/strat to take advantage of this offer. And of course, if you want to give our dashboard a try, it's tradingindicators.com/view. And of course, if there were any questions which were not answered today, then you can always reach out to us via our homepage, tradingindicators.com. Click on support, then contact, put your question into the contact form, and it will get straight to my inbox, and I will answer every single question personally. With this, guys, enjoy the second half of the Champions League final. I don't even know what the score is. I'm going to check it out right now. And I see you all at our next session, which is on Tuesday at 12 p.m. Eastern time, when it's time for our next lunch and learn session. Until then, guys, have a great time. Talk to you soon. Bye-bye.